Guys, welcome back to XRP Insider Network, where we connect the dots between global macro moves and what it means for your XRP before the mainstream catches on. Let's get into it. Here's what you clicked for. A Middle East ceasefire just cracked open. Oil markets are sending a signal that almost nobody in the crypto space is talking about, and there is a development on the XRP ledger that, when you understand it fully, is going to change the way you think about every other blockchain permanently. Not temporarily, permanently. And here's the bonus angle nobody else is giving you today. The oil market's reaction to this ceasefire is actually one of the most quietly bullish macro signals XRP has seen in months. Stick with me because by the end of this video you are going to understand exactly why a geopolitical negotiation happening halfway around the world is directly connected to the timeline you care about as an XRP holder. That is not clickbait. That is the thesis we are going to build together right now. Let's start with context. The global financial system right now is sitting on a fault line. On one side, you have a geopolitical crisis in the Middle East that briefly flared into a near-catastrophic oil shock, then appeared to find relief through a ceasefire, and then, just hours later, showed signs of re-escalation. On the other side, you have an XRP ledger that is being quietly, methodically, and deliberately constructed to handle the exact kind of institutional capital flows that get disrupted when the world's oil supply lines are under threat. Most people in the crypto space are watching price charts right now. The people who are going to build generational wealth are watching what is being built underneath the price chart. And that distinction, that gap in understanding, is exactly why this channel exists. Now, here is the common belief driving most of the conversation right now, that the ceasefire re-escalation is bearish, full stop. Markets are nervous, oil is volatile, and risk assets, including crypto, are sitting in an uncomfortable holding pattern. That is what the mainstream narrative machine is telling people. Sell the uncertainty. Wait for clarity. Come back when the dust settles. But here is the contrarian take that the institutional players already understand. The oil market itself is telling a completely different story. Despite the re-escalation in hostilities, oil prices have not recovered to pre-ceasefire levels. They are still trading near the lows hit when the ceasefire was first announced. That is the market speaking. That is sophisticated capital saying, we believe the underlying momentum toward resolution is intact, even if the path is messy. And when the Strait of Hormuz fully reopens, and based on the incentive structures of both parties involved, I believe it will, the macro tailwind that releases will be felt across every risk asset on the planet, including XRP. Here is the proof. And then I am going to lay out exactly what this means for your position and your patience. Stay with me. Let me give you the macro picture first, because understanding the oil situation correctly is the foundation for everything else we are going to talk about today. A ceasefire was reached, and within hours of that announcement, the oil market sold off by approximately 25%. That is a staggering move. That is the oil market pricing in the end of a risk premium that had been baked into energy prices for weeks. Now we saw a minor recovery when re-escalation headlines hit this morning, but here is the critical detail. That recovery has been minimal. The oil market is not running back to its highs. It is staying suppressed even in the face of new uncertainty. That is what confidence looks like in commodities markets. That is institutional money saying, we do not believe this re-escalation is the real story. We believe the resolution narrative is the real story. And that analysis is supported by something Vice President J.D. Vance said earlier today. Now I want to be precise here because the actual quote matters. Vance stated publicly that he believes the re-escalation stems from what he called a legitimate misunderstanding. Specifically, that Iran believed the ceasefire included Lebanon, and the American position is that it never did. His words were direct. We never made that promise. We never indicated that was going to be the case. He also noted that Israel had, on its own initiative, offered to exercise restraint in Lebanon, not because it was a ceasefire term, but because they want to set the negotiation up for success. That is a meaningful distinction. That is not two parties falling apart at the table. That is two parties with a legitimate miscommunication trying to preserve a framework that both sides have enormous incentive to protect. And when you strip away the noise and ask the foundational question, what do both critical parties actually want here? The answer is simple. The United States, and specifically this administration, wants out of a Middle Eastern military entanglement. Iran wants to stop the economic and military destruction that has been accelerating since the conflict intensified. Those two motivations are not opposed. They are aligned. And when motivations are aligned this powerfully, rational actors find a way to the table. The Strait of Hormuz gets reopened. Oil supply stabilizes. The global risk-off pressure that has been sitting on every asset class, including crypto, begins to lift. That is the macro setup. And for XRP holders specifically, what follows a risk-off period is almost always a period of significant institutional reentry into assets that have strong fundamental backing. Which brings me to the most important part of today's video, because the macro environment clearing is only half of the story. The other half is about what is being built right now on the XRP ledger, and why it puts XRP in a category completely by itself when institutional capital starts moving again. And this next section is going to make you look at every other blockchain differently. I promise you that. Let me be very direct about something before I get into the XRP ledger development, because I think this framing is essential. If you have spent any time in the broader crypto space, you have heard the pitch from almost every project out there. Solana, Ethereum, Avalanche, take your pick. The pitch is always some version of the same thing. Mass retail adoption is coming. Everyday users are going to use our chain for everything from buying coffee to purchasing concert tickets, and the network effects from that consumer activity are going to drive astronomical value. That is the pitch. That is the vision driving the majority of blockchain development right now. And for a certain segment of the market, maybe that vision plays out, but that has never been the XRP ledger's mandate. Not for one day, not for one product cycle. And what we just received from an XRP ledger developer on the record confirms this with a level of precision that should make every serious XRP holder genuinely excited. Here is what was said, and I want to walk through this carefully because the specific language used is important. The developer explained that working with financial institutions has taught the XRP ledger team a critical lesson. Institutions do not adopt new technology for the sake of adopting it. They adopt technology that fits within their existing operational frameworks. And here is the part that reframes everything. He stated clearly that payments were never the full story for the XRP ledger. The deeper opportunity, the one that becomes visible only after sustained engagement with major financial institutions, is enabling what he described as the full life cycle of capital. Read that phrase again slowly. The full life cycle of capital. Not a payment, not a transaction, a full life cycle. What does that mean in practice? It means issuance, the creation of financial instruments. It means trading, the execution and settlement of those instruments. It means collateral management, using assets as backing for other positions. It means credit, the extension and management of lending relationships. All of that, on-chain, on the XRP ledger. That is not a consumer app. That is not a digital wallet for your groceries. That is the backbone infrastructure of institutional finance, rebuilt on a distributed ledger that was designed from the ground up to operate at the speed and scale that global capital markets demand. And now here's the detail that pushed this from exciting to extraordinary for me personally. I had the opportunity to speak with several XRP ledger developers about where their product roadmap actually comes from. And the answer is not a white paper. The answer is not a vision deck from a venture capital firm. The answer is this. The specific features being built on the XRP ledger today, features that are live or in active development right now, were implemented because Tier 1 financial institutions and central banks asked for them, not theoretically asked, not sent a survey response. Actively engaged, explained their operational requirements, and those requirements became the development priorities for the XRP Ledger team. And when I pressed further and asked whether these features were being built speculatively, just in case the institutions decide to show up eventually, the answer was unambiguous. They are not making changes to the XRP ledger unless the institutions are already coming in. Let me say that one more time because I want it to land completely. The XRP ledger does not build features on speculation. It builds features because the institutions that will use those features are already engaged in the process. That is not hope-based development. That is demand-driven architecture. That is the difference between building a product and building a solution to a problem that a real customer has already told you they have. This is what I mean when I talk about institutional inevitability. It is not a slogan. It is a description of a development process. The XRP ledger is being custom engineered to serve the exact workflows of the exact institutions that control the exact capital flows that define how the global financial system operates. Every other blockchain is publishing documentation and hoping institutional users show up and figure out how to plug in. The XRP ledger is having closed-door conversations with the institutions, learning their specific requirements and building the product to those specifications. One of these approaches produces institutional adoption. The other produces a long list of theoretical use cases that never quite materialize. Now let me connect this back to the macro picture because this is where the whole story comes together. When the Middle East tension clears, and based on everything the oil market is telling us, it is in the process of clearing, institutional capital is going to start moving aggressively again. Risk-off positions will unwind. Capital will seek assets with genuine fundamental backing, and in that environment, the question every serious investor is going to ask is, which asset is actually positioned for what comes next? Not positioned based on speculation, positioned based on verifiable, documented, on-the-record institutional engagement. The answer to that question, if you have been paying attention to what we just walked through, is clear. But there is one more angle I want to give you before we get to the chart read on all of this, because there is something specific in how the oil market is behaving that gives us a unique window into the timing of what we are watching unfold. Stay with me because this next piece is the one that is going to help you understand why patience right now is not passive. Patience right now is strategic. Here is the chart read, and I want to be very precise because this is where the macro signal and the XRP thesis intersect in a way that most people are completely missing. The oil market sold off approximately 25% on the ceasefire announcement. That is not a normal move. That is a generational compression of a geopolitical risk premium happening in a single session. Now, with re-escalation headlines hitting this morning, you would expect a meaningful recovery. That is how markets typically behave. Uncertainty returns, fear comes back, the risk premium gets repriced upward, but that is not what we are seeing. The oil market is sitting near the lows. It has absorbed the re-escalation news and is essentially shrugging. That tells you something profound about what sophisticated capital actually believes is happening. The oil market is not confused. The oil market is not nervous. The oil market is pricing in a resolution with a high degree of conviction, and it is doing so even in the face of surface-level noise that is dominating the mainstream news cycle. That gap between what the headlines are saying and what the market is actually pricing is exactly where opportunities are made for people who do the work to understand what is really happening. And when you layer that onto the XRP story, what you get is this. We are in a compression window. Geopolitical uncertainty is creating a temporary ceiling on risk asset prices. Institutional capital is sitting on the sidelines waiting for clarity on the macro environment. But underneath that compression, the XRP ledger is continuing to develop, continuing to deepen its relationships with Tier 1 financial institutions and central banks, and continuing to build the exact products that those institutions have told them they need. The pressure is building underneath a lid. When the lid comes off, when the Strait of Hormuz reopens, when the ceasefire holds, when the risk-off pressure begins to lift, what has been compressed does not ease upward gradually. It moves. The people who understand this dynamic, who have done the work to understand why the XRP ledger is categorically different from the rest of the crypto ecosystem, are not going to be caught off guard when that move happens. They are positioned. They are patient. And their patience is not based on hope. It is based on a documented, verifiable, on-the-record development process that is building the financial infrastructure of the next era of global capital markets directly on a ledger they already hold. That is not a story the mainstream is telling. That is not a narrative you will find on the front page of financial media. It is a story being built quietly, feature by feature, institution by institution, in conversations that most retail investors do not have access to. But you are here. You have access to the analysis. And that gap in understanding between what you know and what the mainstream has not figured out yet, that gap is your edge. Here is where I want to leave you today. And I want to make sure this lands clearly because I think it is the most important takeaway from everything we covered. The oil shock narrative is real, but it is temporary. Geopolitical volatility is real, but it is a surface event sitting on top of a much more important structural story. The structural story is this. The XRP ledger is the only blockchain in the world that is being actively built to the specifications of the institutions that will determine which digital infrastructure the global financial system runs on. Not built for those institutions speculatively. Not built with the hope that those institutions will eventually show up. Built because those institutions are already in the room, already communicating their requirements, and the XRP ledger team is already executing against those requirements in real time. When the macro environment clears, and the oil market is telling us that clearing is in progress, regardless of the surface level noise, the institutional capital that has been sitting in a holding pattern is going to deploy into assets with real fundamental backing. The XRP ledger will be there with a product suite that was literally designed to handle those flows, not adapted to handle them, designed for them from the ground up. Generational wealth is not built on price action. It is not built on reacting to ceasefire headlines or oil market swings. It is built on understanding structural inevitability early, positioning before the mainstream figures it out, and having the conviction to hold while the noise is loudest. The noise is loud right now, the structure is intact. Your position is not a gamble. It is a thesis, and the thesis just got more confirmation today than most people realize. Stay informed, do the work, and never let short-term volatility shake you off a long-term thesis that is being validated in real time, feature by feature, institution by institution, on-chain. Mike out.